You know, think about the dollar from the perspective of, it's just, 50 plus percent of the DXY is just mostly euro. So, why don't we look at the inverse euro? And then there's the inverse gold, which, this is the problem when we're thinking about the US dollar. And it is complicated on purpose, in my opinion. They make this complicated on purpose. The currency markets, the foreign exchange markets, DXY is just a mishmash of a bunch of currencies smashed together, and they tell us that, well, that's the dollar. Well, that's the dollar in comparison with other trash fiat currencies of the world. Certainly, it certainly is. And so, what is DXY currently inside of right now, on the longer term time frame? It is inside of a massive monthly support level after a double bottom, on that monthly chart. Inside of that monthly double bottom on the weekly charts, we're inside of a full retracement long from lows. You can also see that on the daily charts here. We're in a full retracement long from lows. And we're falling back down into a retest of our support levels. And we just pierced the 61.8% line. Now, that's the dollar in DXY terms. What about the euro? Let's think about the euro, and we'll actually go to the euro. And it's actually helpful if we actually invert that. And some charting platforms, you can just put a negative sign, like TOS. See if that works for the euro dollar. Yeah, it works. So we'll invert the euro dollar. What is that? Is that a long setup? Well, it looks much different, doesn't it? Until you start zooming out to the monthly charts. And from 2010's lows to highs, we're in this absolutely massive support level. And there's also a double bottom that, although it's not as clear as when you're looking at DXY, we did dip into a previous low down here. Already this year, we have rallied away from a support level and completed profit targets. And then we fell into another traditional long. And then it dipped in slightly. Okay, well, it looks like that is, you could make a case that dollar strength trade was invalidated a little bit by breaking into that 61.8% line. I think you could make that case. There's another way to look at the dollar, and that's inverse GC. And that's what we consider the real dollar, the actual true blue real dollar. And with that, you just invert GC minus GC. So go down to the daily charts. And the question is has the dollar long invalidated itself? It is not invalidated itself. Now, are there opposing setups? There certainly are. But this halfway back long from lows of the year to highs of the year that dipped in slightly on the euro and is defending its 61.8% line in DXY terms. Let's look at all of them in that same kind of tone. So here's DXY, still inside of a pullback, inside of a double bottom. Here's the euro, double bottom, but pierced its 61.8% line. Inverse gold, no break at all. In fact, it can't even make a pullback from our April 17th lows to highs. So we can see here that the dollar is still inside of the dollar is still inside of longs. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.